we've got a special guest joining us. Dan Tapiero is the CEO and managing partner of 10T. 10T is a growth and mid-stage growth equity venture capital firm, I believe is the right way to describe that. I'm sure Dan will do a better job. Dan is extremely well known in macro investing circles, growth and hedge fund circles for his work on many hedge fund focused macro focused portfolios. I knew of him from the time at Tiger and other places, and yeah, Dan is prolific in his tweets on all things macro and crypto. I really enjoyed getting to know Dan a little bit over the years, and we're super excited to have him join us on Money Talks.
Hey, Bill. Great to be here. You mentioned something about the merge. I wanted to ask you about it. I thought that was a really good summary for your listeners. And before we talk about the macro, I just wonder, do you think that this is sort of, I don't want to say the end of proof of work is a validation method, but, new chains that get brought on, does this mean that basically everything from here on out will be proof of stake? That's a great, well, I like to ask the questions, but that's actually a great one. So let me try to give you my perspective. What do you think? So look, I think I have three conflicting perspectives on this. First, I think that it's important in crypto to have technology competition. I think that Bitcoin's role as a stable, hard asset should not be interrupted, and anything that puts that at risk should be fought against tooth and nail to its core. Okay, and I think that when we have new technologies, for example, Mimblewimble, which adds a whole bunch of privacy capabilities to Litecoin, or in theory could add it to Bitcoin, is tested on platforms like Litecoin first. That's very compelling. Now, proof of work and proof of stake is a whole other level of technology competition, right? Because it is a fundamental, almost religious difference in how we think about consensus for transaction processing, and basically creating a historical record of transactions. And the reality is that proof of stake makes a lot of sense for a system that is trying to be the world's computer, that may be willing to sacrifice a little bit to get to a scalable solution, which will come probably next year with sharding, versus Bitcoin, where the community has spoken and on-chain scalability is not a requirement, meaning it's secondary to hardness, security, and the viability of the network itself. And those two networks then can diverge to serve very different purposes. One being the sound money of the future, and the other one being effectively the decentralized internet, which is where Ethereum's going. What you're suggesting there then is that proof of work will de facto only be for Bitcoin.
That's possible.
I mean, which is kind of interesting. I mean, there are a bunch of proof of work chains still out there, smaller ones. I don't know what happens with them, but I just think about the future. Is this move by Ethereum, since they are the leader, change the nature completely?
If you look to the developer community, if you look to folks that are forking chains, working on new systems, nobody's working on proof of work other than the core Bitcoin community. And I have no problem with that. I welcome that divergence given their nature. I don't think that we're going to see a lot more, as much, I should say, technology competition for what becomes the hard money of the future. I think that ship has sailed in terms of network effects. And now the fight is over decentralized computing itself.
Right. But what about what do you really think is the greatest risk? I mean, obviously Vitalik and crew have thought a lot about this. And as you said, it's been many years in coming, but is there anything that sticks out in your mind as a true risk?
I think the true risk for Ethereum is what's next, meaning
Or
can we
proof
get
of
it to
stake.
scale to Visa? Well, look, I think obviously we'll know in 4 days. I've used the analogy on the show many times. Ethereum is basically changing engines mid-flight. It's a 777, Dreamliner, changing engines mid-flight with 1,000 passengers on board. They're crammed in their seats, 2 per seat. Okay, and the airline, the flight is in the air. If they don't change engines, it's going to crash. If they fuck up changing the engines, it's going to crash. So they have no choice but to get it right. Okay, so that's where they're at with that. But I still think the bigger risk to Ethereum is it going to scale, and not necessarily just on layer 2. And I think that the roadmap is correct, and that's the risk.
What about something like Lightning? I know it's earlier for that on Bitcoin. Do you ever see that taking off? I mean, it looks like, it's from the left. When you look at the volume or interest or however it is, number of people engaged with it, it's from the left to the right.
Yeah. And by the way, I know the Money Talks team, the production team is watching. We got to get you guys to get Dan his own show because he's a natural. So all right, let me talk about
just having a conversation here.
It's awesome. So there's 2 perspectives on layer 2, right? There's the Ethereum perspective and then the Bitcoin perspective, and they're very different. And we're going to do a whole set of programs on Ethereum layer 2 post merge. But your question was specifically on Lightning, and for me, it's hard because I came out on the other side of the debate on block size. Satoshi, in my mind, was very clear on this. Bitcoin was designed to map with Moore's law and other laws in terms of its on-chain scalability, and the broader community has completely rejected that. I disagree with it, but my opinion doesn't matter. I'm just one person, right? And so now I have to basically say, okay, as somebody who believes in the ethos of Bitcoin, independent of my personal opinion on scalability, how is it going to actually become usable for 1 billion people? And now we have no choice, right? It's going to be a combination of banks, right, to provide layer 2 capabilities, and Lightning to provide layer 2 capabilities. That's it. There's no other way.
There is a world where that actually, can, I don't want to say challenge Ethereum for that world computer role, but there's a lot of, there's a lot of, certainly a lot of adoption could happen when I think about where it could happen through that framework.
But the broader question becomes what works or what makes sense on chain versus what can be done by a TTP, a trusted third party. Tornado Cash tells us that there should be limits on the watchers, and we need to be very careful and be very clear about who's going to watch the watchers. Because when the watchers can come in and say this software is now effectively illegal, that's a problem. And that basically says to me, we should be able to put this on chain so that no one can stop it, right? And so that's something that Bitcoin can't do. And so in that regard, when you think about truly decentralized computing in the world's computer, Bitcoin, Ethereum is in its own league, and Bitcoin was designed to not have all of these technology complexities built in, right? In order to keep it simple, stable.
I know, but I know, but the nature of human beings is that they're, going to want to improve and tinker. I mean, the great tinkerers of history have been some of the great inventors. And so, I just wonder, like that's the situation today. And I sort of live in the future. I'm never thinking about what is today. I'm always, thinking what can happen, what's in the future.
Look, I mean,
so I just think
there's, go ahead, finish.
I was just going to say that I know where we are today, but I just wonder, the stability of Bitcoin is just unbelievable. I mean, the fact that, and that it's cemented, literally cemented by the proof of work is, I think it's a phenomenal innovation that I'm like not so easy just to throw away and get rid of and say, okay, that's just good for, gold or whatever it is, a gold equivalent or collateral. Now that's a huge thing.
Sure.
But I think the nature of people in the space, as you say, there's big developer communities. maybe there's one innovation down the road or something, and then all of a sudden it changes. And that's the one thing in this space that, as you know, having been in it for quite a long time now, that innovation is happening at breakneck pace.
Yep.
And, you don't survive if you don't have the ability to pivot. And
Right.
so I know that Ethereum is garnering a lot of attention, and developers certainly like working with it more. I just wonder, like, are we all ready to, I don't want to say jettison proof of work, right? And just sort of say that's a nice archaic old Bitcoin type thing, and forget about just the incredible innovation that was and is.
Yeah. I think proof of work scales better than what we've allowed it to scale. Okay, I'll say that. Now, and I'm talking specifically as a settlement layer for monetary transactions.
Yeah.
Right. Yeah. It does scale better than what even the core community, in my humble opinion, has given it credit for, which is why we've ended up with Lightning the way we have. Right. And now effectively a dependency on Lightning working. If Lightning doesn't work, the Bitcoin community has no choice but to go back to, what Satoshi originally posited the scaling plan would be. Satoshi did not posit that, we would get to Bitcoin at 1 billion people via a layer 2 system that wasn't as trustless as Bitcoin itself. Right. That was never the plan. But we've all accepted that given the current plan, we have no choice. That's it.
Yeah. Well,
so that's actually a good segue into my softball question for you, which is, is this going to shit? I mean, I see your posts. I see the housing market.
It depends what you're referring to.
Yeah.
There's certain tokens, certain altcoins, certainly that are down 5% or whatever. So that.
Well, let's not even start with crypto. Let's just talk about like the broader economy. I mean,
I think, look, I think it's very clear. I mean, if you speak to anyone with experience in the macro world and guys who I used to speak with and deal with all the time, the forward-leading indicators, the stuff that looks out sort of 6 months, is all bad, weak, negative, in some cases showing growth down back to, levels where we were in 2008. And so, and if you read, which I'm sure you do, Raul stuff, and there's ICYMI and all these different commentators, plus some of the, the top portfolio managers still trafficking in this area, we all sort of look at the same, let's say 100 pieces of data or 200 pieces, whatever you want to call it. And there are pieces that are leading that give us a little edge on the markets. And there are pieces that are lagging that we ignore. Now, the CPI headline and the unemployment rate, let's say of the 100 indicators we look at, are the two most lagging, essentially. Right. Okay. Right. So
maybe rent might be the third, right?
Bottom 2% of most lagging. So obviously the Fed is aware of this. Why is the Federal Reserve waiting for the most lagging indicators to turn? I think, look, there's the obvious explanation, which is that, hey, they want to get inflation down. The world knows it is CPI. They're going to very simple, almost like robotic type response, which is very uncharacteristic of the Fed. I mean, certainly when Greenspan, Bernanke were at the head, more just Allen and Greenspan, with a lot more nuanced interpretation of the data. And I'll tell you, when I think of the most important moments in the last 30 years in the history of central banking, I don't think you'll read this in a book. This is from being a practitioner, from a guy who lived every moment of it.
Yeah.
Was the way that Greenspan backed away from tightening in early 95 and mid 95. And what he said was there was a speech in the middle of 95 that was very important. If you remember, 93 rates got very low. In 94, they raised rates tremendously. Roughly, I think the two went from 3% to 8%. I think that was the number. But Greenspan said something that was truly innovative, at least for the time. And he said, even though the CPI ratings may continue to increase, there will be a condition there will be a time when, even though that is the case, we will not be raising rates because the forward-looking data will be softening, and we are keying to, our forward-looking metrics. And so he backed off. He backed off from continued tightening, and in fact, the yield curve inverted in 95. And then it was that backing off that set the stage, I think, for a 5-year bull market that led into 2000. And so,
which generated, by the way, huge revenues for the government, right? Record
billions and zillions of dollars. But that was smart policy. Okay, Mexico did blow up in the Q1 94. That was the financial event that told Greenspan, okay, now I'm 100% sure things will slow down. It's not just leaning on my forward indicators. Today, we have lots of forward indicators, as I said, even more than then, that are suggesting that the next 6 to 9 months, we will have a significant slowdown in growth and inflation. And so one macro guy like me, I just say, well, look, I know this. I know you guys know this. What are you trying to break the system? And it sort of feels like after, the thing they did in Wyoming or wherever the hell it was, that, that is indeed their goal or their stated goal, right?
Yeah. So I think about what's happening in Japan. I think about what's, the yen is becoming worthless at an alarming rate. The euro is becoming, equally worthless at an alarming rate. The prospects for this winter in Europe are equally alarming. You mentioned 94. The Fed had Rubin going from Goldman to Treasury, whispering in his ear, say, "Hey, we got to fix this." Right, which is a historical macro guy that could see that it wasn't tea leaves. I mean, it was obvious, and I don't know that Yellen has the same whisperer or somebody. Anybody, whether it's Fed or Treasury, has somebody whispering in their ears, "Hey, look, yield curve control is breaking Japan. The situation in Ukraine is a fiasco." And this is going to basically drag the strengthening dollar is going to drag us into a recession much worse than 2008. And, we're basically following, as you said, the lagging indicators, which makes no sense given that the economy has already run into a brick wall. Right. I'm at a loss.
Bill, you've never had mortgage rates double in a year like this. I mean, never. I mean, in any time recently. At the same time, and I've mentioned this on a few other podcasts, at the same time, the oil price doubled in the previous year. And then, the dollars had this giant move. All of this stuff is a huge liquidity suck from financial markets. And then you look at the first half of the year and you have the worst performance for bonds and stocks combined, I think, ever. Now, look, the previous 2 years were great. So there's some give back. But what's happening now is a lot more than give back. And I do fear that there is going to be breakage. The geopolitical things you mentioned, I think, have some impact. I mean, Ukraine, et cetera, Europe. But frankly, it really is just more about the speed, the rate of change in the rate of interest makes a lot of stuff untenable that wasn't untenable last year and in the previous sort of 5+ years. And so you start to think, well, what are the ramifications of the Fed's aggressiveness? Well, certainly, I think the Democrats get crushed in this midterm election.
Yep.
I don't think that's an explicit purpose of Jay Powell, but that's definitely going to be the result. I think, look, what they did was typical of what I would say a junior trader mistake that they make. They panicked and puked or changed their mind at the low, and then they changed their mind again at the high. They got whipsawed. I think the idea that inflation is transitory will end up being true. It's just that they missed the timing by a year,
a lot,
or a year and a half.
Right.
Yeah, but it's not really for the Fed to trade, to be a trader and to nail the top.
That's the point. That's not their job.
Ameliorating, right. And so, look, there's not a single traditional macro market guy on that board. It's all academics. Jay Powell never traded or managed a portfolio of macro. He was, I think, a private equity guy. It's remarkable to me, and I always thought this is weird all the way back to when I first started my career in the early 90s that you mentioned before, Tiger, that there were no true macro guys sitting on the most important macro decision-making board. They have a shadow committee made up of private sector people. And, there are guys from the banks and other well-known people sitting on, and they give advice to the Fed. But, the fact that there isn't somebody who really has lived this in real time, and there are many guys out there in their 60s, certainly famous guys, I don't know if they would do it, but certainly I think are more capable of managing monetary policy. He just didn't have the will to hold his fire, right, when he was wrong. But I looked at the ICYMI prices paid report yesterday. It came out a few days ago. It hit 52. It was at 90 in March, and it was 90 as well in March of 21. So I he held out and then reversed to becoming super aggressive. And now he should be reversing again. And he's not, because he sort of set his course. And so that inability to change, that inflexibility, I think is dangerous. And I think that there are things that are going to break here. Housing for sure is going to enter a slow period. There's no way the U.S. housing market, which is a big chunk of growth for us, can handle a 6% mortgage rate. It just can't. And it's just a matter of time. And as you mentioned, I've put a lot of these different charts and comments on my Twitter thread from March, April. And of course, what does this have to do with us? Why are you and I talking about it? It's because, unfortunately, this macro liquidity cycle has more than any other really impacted crypto, as opposed to really crypto imploding on its own, like it did in 18, right?
So I want to come to that in a second. So it seems to me that it's like politics predicated on this idea that the public is stupid, and therefore they're not capable of understanding what's really going on. So we have to focus on the trailing indicators, which is what they focus on, because they're not macro experts. They didn't study history, et cetera, et cetera. And the fact that we didn't either is kind of irrelevant. And we, meaning the Fed, didn't either is kind of irrelevant. And basically, we're just going to, focus on that as opposed to the reality, which is that every in the moment indicator is telling us that we've hit a brick wall. And the car slammed into a brick wall.
Ed Hyman, who I think is one of the premier economists in the US, his front page of the piece that he puts out, there are 20 different readings of inflation that suggest inflation is slowing. 20, not one, not two. Okay, so I think the markets, again, I hate commenting about intraday action or day-to-day action, but the CPI is out next week, and I think that there's discussion generally that it's going to be softer than people think. And I think that's what this little move up is about. Again, I'm not a day trader or trading, these things day to day. So, but I think that that's generally what it's about. And I do think CPI has peaked for this whole cycle, maybe, but I'm not going to call a fine point on it. Maybe it peaked last month, maybe 2 months ago, maybe it's this month, whatever. The point is that with a very high degree of confidence, it will be significantly lower 6 to 9 months from now. And I don't even do this for a living anymore. I'm, 10T is a private equity fund. We make investments into crypto businesses. So, but it's hard not to have my macro hat on after being in that world for 25 years, because now the connection to the crypto world is very clear and obvious. But I see it as an opportunity for us. I mean, we didn't get caught in the down move. Our funds are still doing very well. And, hopefully over the next 6 to 9 months, we get to continue to buy things at a discount. I mean, I can hold off getting into that, but vis-a-vis the macro, you mentioned Europe and Japan. Over time, the correlation between just global GDP and US GDP is very high. So that's why I tend to just talk a little bit more about the US, but clearly Japan, look, a weakening yen is actually probably very helpful to them. The Chinese economy has been softening. I think that's more of a risk. I think that they lowered rates a month ago.
Yeah.
They have some really big issues in their property market. It's a very opaque economy to begin with, but you can't have that economy growing 3% or whatever the recent growth numbers are. It's just too small. That's like us having negative growth, given that it's still a little bit of an emerging economy. And Europe hasn't had a lot of growth, since the 80s. I mean, I don't know. It's not. So I don't, honestly, they've had negative interest rates for so long. I was looking at a chart of the German 2-year the other day, and I just, I think this is about rate of change. You can't just overnight say, well, rates are negative and now they're going to be 2%. And maybe 2 doesn't sound like a lot, but
it's all relative, for sure.
Yeah, and there's a huge amount of these economies, US, Europe, that are leveraged to a certain rate, and the growth and people's expectations just completely will change.
So let's talk about the implications here for crypto, because I think that's what a lot of our watchers, they like the setup. I'm getting the feedback in real time, by the way. So I'm watching the setup makes sense, okay? And so what's your dinner party answer to, okay, where is this crypto thing going?
Well, I think
why do you not think that crypto hasn't had its?
I lost you, Bill. Looks like I lost you there. Can you hear me? Is that me or you, Bill?
I got you. It was me. I think I'm
okay. I'm all right here.
Yeah.
Bill, are you on? Bill, why don't you come right back? You're jumping in and out. Oh, there you are. Are you back?
I'm back.
All right.
Can you guys hear me? Yeah. So the question was, what's the dinner table answer to where is crypto going and why?
Yeah, I mean, look, I think about everything in terms of risk and reward and probabilities. I think if you try to, if you're a long-term investor like I am, and you try to nail the absolute low. Now, I've done that before, and I do know how to trade, and I've done that for many years. I did that for many years, but that's sort of not the point with, I call it Bitcoin, crypto, blockchain, this whole area, which I sort of wrap into DAE, or digital asset ecosystem, which to me is everything. And I think that, if you try to do that, you're sort of missing the whole point of this, and certainly why I'm involved, which is that this is structural change. And I think everything you do, you need to have at least a 5-year view on. If you're coming in trying to catch a double or whatever it is, or you want to get the next Solana, buying it at $1 last January or whatever it is, that's fine. But as an investor, I just think it's an extremely difficult market to trade day to day. The most volatile asset that's changing faster than anything I've ever seen. So what I say to people generally is, look, if you have zero allocation in your life, in your portfolio, that's a mistake. Now you decide, you want to have 1%, you want to have 5%. I think 5% for people who aren't there is probably reasonable. And then from there, you can chop it up a bunch of different ways. I think, for instance, you probably should have, of that 5%, you probably should have a little bit in Bitcoin and Ethereum. You decide, do you want 50-50? Do you want 70-30 Bitcoin, Ethereum? Do you want 70-30 the other way? That's one thing. Then you also should have a little exposure in a venture fund, whether it's, Polychain or, Paradigm or, Pantera or, any of those P's, or Andreessen. Those are venture capitalists right out of Silicon Valley, and they are going to bet on that next great thing. And they're going to have an extremely volatile P&L profile, but so be it. And then you should have some money, I think, in 10T, which is why I set it up, because these are more mature companies that we're investing in. They're not going to go up 100x, but our portfolio we think can make a 5 to 10x return in the next 5 to 10 years. And so I think you block it out that way, and that's how you have exposure. Now, in terms of purchasing Bitcoin, let's say today, or Ethereum, the risk reward is absolutely phenomenal. I think that, let's say maximum you have 10,000, or you have, let's say 50% downside risk. I don't think you get there, but I think that's, you have to think that. And I think certainly by the end of 24, which is post the Bitcoin halving, you're going to be up above 100,000. So and I don't think I'm being very aggressive in that view. And so I say, okay, I'm going to risk 10,000 to make 80, right? I think that's a pretty good bet, right? And you size it the way you want. If you want to put $100 in today, you'll say, I'll risk 50, but I think I'm going to be able to make, 5 times that, right? So, right, like 20 to over 100,000. So from today's price, but I look at things in terms of risk. I was a portfolio manager for my whole life. So I'm actually risking 10,000 to make 80,000. I think that's a great bet. And if you need more than that, and you want to, go crazy with your MetaMask and DeFi, and Bill, I'm sure Abra offers all kinds of cool things that you can do with your, in terms of staking and getting yield and being involved in all sorts of different cryptocurrencies, you can do that. But for someone who's, just looking at this and just starting at this, I think it's a very simple way to do it. And you don't need to buy all your Bitcoin day one. And my suggestion is you also, you say, I'm going to buy it over the next 6 months, and I'm going to buy X amount the first of every month. That's it. And this is, again, this is structural change. This is the move to a whole new accounting system, a whole new way of accounting for value, for trading value, for, a whole new world. We talked before about Bitcoin as pure collateral. I really believe that. I believe in this centralized borrowing and lending space. I know it's blown up, unfortunately, with Celsius and BlockFi and a bunch of other people. But I really believe in this long term. We made an investment in a Canadian company called Ledin. Ledin has not blown up. They've done very well. They were super conservative. And I think that there are going to be new people coming to this space, because a lot of people own Bitcoin and don't want to sell it. And yet they'd like to, maybe buy more Bitcoin. I always bring the case up of the 29-year-old guy who's got $9 million worth of Bitcoin, and he's living in his grandma's basement because he doesn't want to sell it.
His apartment.
Yeah. And so he's like, well, I can buy that $1 million apartment if someone lends me money against my $9 million of Bitcoin. And basically no bank in the world will do that. Ledin will do that. I don't know, maybe Abra.
Abra will actually give you a 0% interest loan against 15% LTV. I don't know anybody else who will do that.
On what?
I think we're up to about $1 million in loan size now for retail, and then we're up to orders of magnitude more on the institutional side, and we're looking at increasing the retail side as we go. And it's a very popular product for us.
Yeah, I think that, like, I would even, not that I'm going to ever, I would tell you how to run your business. You've done just fine. But I think to focus on that product, there is massive demand. Yeah, I really do. I don't know that you want to move away from Bitcoin and Ethereum at the moment as collateral type assets. Like, I'm not sure you want to do it on Solana just yet. Or some of the other ones, but certainly Bitcoin and Ethereum, very easy for you also to manage and qualify the risk, right?
Yeah.
So I want to just say one thing, just even the conversation we're having right now about this, we would not have had 3 years ago. We would not have had 5 years ago, when people say, oh, it's a flash in the pan. Oh, it's for Ponzi. Oh, all this, like, you got to understand that there's a people watching, there's a whole, new financial, economic, monetary system that is growing up right next to the old world. And, a lot of people, they have no idea. And look, it's hard. You talked about the merge before. If you're not involved in the space, like, you almost have to learn a new language. And so I'm sure you, like me, spend a lot of time educating people. And I know you've got a great head of sales there who spends a lot of time educating people.
He sure does. Yeah.
So, it's sort of funny, like, we're business people and we're entrepreneurs, but frankly, I spend half my time sort of in this education role.
Yeah. So let me segue that though into a last question that answer any way you like, because I know you got one of the things that didn't exist at the same time you were talking about collateralized lending or centralized versus decentralized lending, which is the biggest and fastest growing part of our business now. The other thing that didn't exist was growth stage equity in the crypto space, right? And you've been a pioneer in now basically companies going to the next stage, right? Because it was all seed, Series A type deals for a long time. Companies that were doing well 5 years ago were actually struggling to get that Series B, Series C deal done, even when they were profitable, which in traditional venture is unheard of. Right. And now, there's obviously no longer a void, but you came in at a time when there actually was a void.
Well,
and I'm curious.
Bill, I think there's still a pretty massive void, but anyway, you're curious. I'm sorry.
Yeah. I mean, in that regard, what are the key things that you look for? Is there a thesis around, this is how the ecosystem looks and this is what we're looking for? Or is it like, hey, we're just broad, and if the company meets these criteria, we're interested?
Well, no. So we still, as far as I know, are the only fund in the world that focuses exclusively on the growth stage, on mid to late stage, not so much late stage I'm interested in. We've made 18 investments, all but one of them, I think, we have one that's slightly impaired, but I don't think so bad out of 18. Most of them have a tremendous amount of cash right now on the balance sheet. So, we don't really have companies that are suffering now. Which is great. It allows us to be, to play offense. But look, we're looking for companies that are generally, and again, this is the rare thing, as you mentioned, that are making, $30 to $50 million in revenue, where we can pay about 10 times revenue. We think that that's generous. Yes, in traditional VC, to have any revenue is wonderful or rare. I think that that's sort of that's the niche right now. I don't know how long it's going to last, that we can actually invest in companies growing hundreds of percent at 10 times revenue. Now, we passed on a lot of companies last year, over 100, that were raising money at absurd valuations, 30, 50, 70 times revenue. That's just not, we need to think we can make a 10x return on our investment. So I need to be able to think, okay, and model out, and we do a tremendous amount of work. We spend weeks and months writing these very long investment memos on each of the companies we own. And we need to think we can make a 10x return. And so if you're a company making $50 million in revenue and you're roughly at a $500 million valuation, I need to think that you could be a $5 billion company in the next sort of 6 to 8 years. And so it's a lot about, what the vision is, what the plan is, and that we're really investing a chunk of money because you're going to scale, grow, drive your business with that money. And so we've made some very large investments for the space. We invested $170 million into Ledger. We did $150 million into Animoca. We invested $120 million into Deribit, $80 million into Gemini, $120 million into Kraken. So it's not just exchanges, but some of these larger companies that are massively profitable. There just aren't a lot of alternatives for them.
Yep.
And so, we come in, and some people flatly say, look, no, we want 50 times revenue. So I say,
Yep.
okay, that's your right. It's your business. Thanks. And I'm not against paying higher a multiple, but we really have to believe that we can make a 10x on our money, which is in the space, as not really, I don't think we're being unreasonable, right?
Yep. Yep.
So
that makes a lot of sense.
Yeah.
So what is there, a specific?
The thematics.
Yeah.
Yeah. So the first, we have 1.2 billion under AUM, and the first two funds are fully allocated. The third fund is 50% allocated. It's about 750 million in the funds, and then another 500 in co-invest. And so we have a very diverse LP base, institutional investors. It's actually even surprised me, the breadth and sort of depth of our investor base. But the first two funds, there were 3 buckets that we wanted to invest in. That's sort of done. The third fund, we have 3 buckets as well. One of them is called New Era DAE businesses. So companies that New Era, like digital asset ecosystem businesses. Then we have metaverse, NFT, and blockchain gaming companies. And the third one is just DAE infrastructure, digital asset ecosystem infrastructure. So in the first fund, a New Era DAE business would be something like Ledin, right? Mm-hmm. That's an investment I've already mentioned that we have. Metaverse and NFT businesses, Animoca would be a good example. And, DAE infrastructure, we have 2 companies that we have now in the third portfolio. One is called Credo, and the other one is called Infistones, which is a staking as a service business. We own Figment in the first 2 funds. That was sort of an infrastructure, that's an infrastructure play. I didn't want to have too much duplicate exposure in this third fund, so we took a little position in Infistones, and maybe we'll have, most people have never heard of it, which is very funny. It's the third largest staking as a service business out there. Does a huge amount of business with Binance. And so again, we also want to be geographically diversified, roughly, between a third between, North, the Americas, Asia, and Europe. But there are also certain businesses that I like that I think have greater prospects than other businesses. So it's a combination of things, but broadly, anything that's fitting into those 3 buckets, we give ourselves enough latitude, we'll look at. And again, it's very important for me not to invest in sort of 2 guys in a garage with a big idea. I don't like the venture investment profile. It's not that doesn't work for, other people. It's just that the idea of making sort of 10 investments, 9 go to 0, and 1 ends up being Google, is just not me. I'm a macro investor. And this is a sector bet. We're putting together a portfolio that's diversified. And I want to say this, the digital asset ecosystem today in total is worth 1.5 trillion. That's all the value of the cryptocurrencies and the value of all the equity in the space, roughly. All I want to say is, in the next 10 years, do we think that 1.5 trillion goes to 15 trillion? And if you do, as I do, what companies will participate in that growth? And that's sort of it. And I suspect now, like the growth in the space, Bill, I don't even know. I know you're deep in the weeds there, but I'm looking at it from 20,000 feet above. And 2.5 years ago, there were only 14 companies in the world that had a valuation of over $1 billion. And today there are over 100 in the space. So what that means is that 10% of all the unicorns in the world across all business
they're in crypto.
People don't know this. So Blackstone and Apollo and all these other giant private equity firms, they're coming. And I worry every day about, how long we really have. I can't be that some old time macro guy is going to be the only fund in this space, be the only guy doing this. So we're trying to move as fast as we can, but I'm sure like dealing with this world, it's just moving so quickly.
Yep.
Even in this bear phase, we have 4 or 5 companies that are making more revenue this year than last year, if you can believe that. I mean, it's crazy. We have some of our exchanges are down, 30% or so in terms of volume and more, but we have other businesses that are doing better. So our portfolio, we're not down like a lot. Some of these funds in the space are down 60, 70%. Again, they were up huge last year.
Yep.
So, it's hard to, you don't want to.
Yeah, that's interesting for us. I mean, obviously we have both a retail business and an institutional business, and then we have our lending business, which is both retail and institutional, right? And so last year, retail dwarfed institutional, and this year institutional is dwarfing retail, and the demand for our institutional services is just exploding. And my prediction is to your point about, the next halving in 24, I think we're going to see another retail cycle, but I think this next retail cycle is going to have key differences. I think there's going to be a banking component to this where people are going to start becoming kind of crypto banked, meaning that stable coins are going to become part of a core bank account. That didn't happen in the last cycle, right?
Yeah.
And so I think we're going to have another retail explosion, but it's going to be stickier because people are going to be willing to use crypto banking services like Abra as their core bank account, whereas right now, people are not very sticky with their exchanges, meaning people will just go wherever they need to go to do whatever they want to do. Whereas you don't really change your bank account very often, right?
Yeah, I think the key thing also for you to mention is just how geographically diversified, from what I recall, that you are. Because for us, one difference is we see all these VC funds and they tend to focus on stuff in the US because that's what they do. But this is not a US business. This is a truly global business. It may be the first truly global business of all time. And so you can have a business such as yours. I don't know, how many countries are you in now? 20?
We're 150. So there you go. So you mentioned Robert, our global head of sales, so I know and he's got people all over the world now, and it's a private banking model, and I can't keep track. I'm on calls at Dubai or Singapore and Mexico City and of course London, and the list just goes on, and the demand is universal, right? And as I said, it's cyclical on both retail and institutional side, more so on retail, but the demand on high net worth institutional business for us has just been up and to the right. Yeah.
I mean, and again, it may not be in the US where things are maybe under pressure a little bit. It may be, there are places that are, I don't want to say doing fine, but that just aren't under such severe stress. I mean, the markets here have gone down a lot. Let's not, kid ourselves if you've owned bonds.
Absolutely.
So, but that doesn't mean the whole world is that way. And so it's a big world out there, and that's a big part of our portfolio. I mean, the companies that I just mentioned, Ledger's a French company, Deribit is a Dutch company. We look at, Infistones is focused quite a lot in Asia. Yeah. So, Animoca's an Asian-based company. So we really think that that's the future. And
well, I also came up in early stage venture where the US led the way. And with all the regulatory arbitrage going on, in many cases, the US is not in a position to lead the way, right? I mean, FTX is doing things outside the US they can't do inside the US. Right. And Abra tries to be. Yeah, it's very unfortunate, but that's the reality. But that's also an opportunity for somebody.
Yeah.
Maybe growth in certain places outside the US.
Yeah. Also, I mean, look, if we can get someone in the leadership politically in the US who's under the age of 50, this could change in a second. I mean, the leadership we've had has been abysmal. And you just can't have an 80-year-old guy or gal or whatever you want to say running a country that is trying to be dynamic and the growth engine and the innovation engine of the world. And so it's just, there's no chance that guy or his team or anybody in DC, I mean, they haven't even made the proper effort to understand what's going on here, it's embarrassing, frankly. And
I don't think there's a geriatric crypto subreddit. I'm going to go out on a limb and guess that doesn't exist. And it's not going to exist anytime soon.
Bill, we may just have to be patient and wait because, we're going to get this within the next 10 years. We'll get a crop of younger people. And as you know, they automatically, almost instantly understand the value proposition here. Yep. And, so the U.S. is behind now, but, if we can be patient, maybe they'll come around. I just hope it's not too late that other people haven't stolen the thunder, right?
Yeah, we'll see. I don't know. Fascinating discussion, Dan. Thank you so much for joining. Thanks for the time. Love the insights. Getting a lot of positive comments on your commentary across YouTube, Twitter, Facebook. I don't know if you realize we actually broadcast across all those channels. So that's been great, and we really appreciate you joining. Looking forward to seeing you. I guess we'll SALT, Digital Asset Summit, Masari Mainnet. It's UN week craziness starting in New York City. So, well, obviously we'll be on a panel together, but we'll be seeing you around the hallways, I'm sure.